The following is a sample from Tax Savage's Basic Tax Preparation course.
Circling back around to canceled debts. So, if you go through a bankruptcy court and your debts are canceled by the bankruptcy court, you're in the clear, and that's not counted as taxable income. However, what most people don't know is that any debt that is written off during the year is considered taxable income by the IRS. You'll receive a Form 1099-C in the mail, and it'll show you what you must list as additional gross income to your taxes for that year. This often happens when companies write off debts you may owe. I'll give you an example. I had a client who came in and brought all of his papers in a shoebox, of course, and among them was this lonely 1099-C. They hadn't even looked at it and didn't know what it meant when I inquired about it. I asked if they had any debt written off, and the guy broke into a big grin. "Oh yeah, and they kept wanting me to pay off the balance, but I didn't have the car, and I'm definitely not paying for something I don't have, so they wrote it off. I don't owe them anything. Man, that car was a piece of crap anyway, and..." His girlfriend poked him pretty hard at that point when she saw my face. "You know you still owe taxes on that, right?" "What are you talking about?" he said. "I paid taxes to the county when I bought it. Plus, I don't have the car, and I didn't have to pay them for it. They had the car, and I had the write-off papers at home. I don't owe them anything. It's a clean break. They got the car back, I got to keep the rest of my money." I glanced at his girlfriend. She was catching on. "Apparently, you were legally contracted to pay them for the car, so when you didn't, even though they repoed it, you still owed the money. When they wrote that debt off of their books, they sent it to the IRS so they could claim the write-off credit, and now you owe the IRS taxes on that." The guy was floored. "What? I don't owe anybody anything. They have the car." "Look, man, you'll have to settle what you do or don't owe to the company with a lawyer, but most likely you did owe it even though they have the car. Contracts suck, especially the fine print. One way or another, the IRS doesn't care. According to them, this was free income to you, since that's $50,000 you didn't have to pay. Way more than the $600 minimum for 1099-Cs, by the way. They're going to consider it income, and it boosted you into another tax bracket, my friend." He was fuming mad. His girlfriend was patting him on the leg, trying to get him to settle down. I put my palms up. "Hey, don't shoot the messenger, okay? I'm sorry they didn't explain this to you, but most people don't even know what happens when they write off the debt. Their back-end bookkeeper probably just assumes it's some crazy voodoo magic where they write off the debt and get a credit for it from the IRS. But someone has to pay the piper, and in this instance, it's you. That's just how it works." After his tax credits, single guy, no kids, so not a lot of those, he owed a pretty hefty sum to the IRS. Please make sure to explain this to your clients and any of your friends who think it's cool to dodge their debts. Once that's written off, it's fair game for the IRS. They're giving a tax write-off to the company involved, and they want their money back somehow. If your client is in a really bad way with money, tell them to just suck it up and file for bankruptcy, or they're going to be in an even worse way. Just so you know, tell them nicely if you still want them to be your client at the end of the day. You can laugh after they leave.
This was a selected clip from our course on basic tax preparation training. For more clips like this one, subscribe to our channel or go to taxsavage.com, where you can see our professional tax preparation software that includes this entire course, a $396 value for free.